All right, here are the 4 quadruple basic investment returns for multifamily real estate. You might have a single family, a property or two, have a small portfolio, but this year you want to scale to that next level. In order to scale, it's important to know the main basic investment returns you should look for every multifamily deal that you acquire. So we're going to break them down in this video. So I'm on Pablo, multifamily done for you. Let's jump into it. I got an acronym for you to help you remember this. The acronym is CASA. My casa es su casa, right? Mi casa es su casa. CASA stands for cash flow, appreciation, shelter, and last, amortization. So I'll break it down for you short and sweet, all right? I respect your time, let's get into it. First thing, cash flow, all right? What is cash flow? Cash flow, just to put it in simple terms, is money coming in versus money going out, all right? Now to break it down a little bit further, it's pretty much your gross income. That can come from rents, that can come from coin laundry, it can come from air rights, it can come from application fees, it can come from vending machines. However you're monetizing this multifamily asset, income coming in. And then what you want to subtract next are reserves. Reserves for vacancies and maintenance, because there will be some natural wear and tear, and there will be some vacant units, right? So you want to make sure you have a reserve set aside, and you subtract that from the cash flow. Also, you want to subtract from your gross revenue outside of reserves for vacancy and maintenance, operating costs. Things such as property management, if you choose not to manage the property yourself, utility expenses, property taxes, insurance, and many other things, right? Besides the operating costs, you also want to subtract your debt service, okay? That debt service can be your mortgage payment, whether you have additional financing on the property, and so forth. So when you have all those things considered, your bottom line, that's your cash flow. That's the profit in your pocket. So that's the first investment, basic investment return that we look for is cash flow. The second thing, let's get into the A. I mentioned the CASA, right? Cash flow, appreciation, right? Now there's 2 types of appreciation, okay? You might be familiar with the first type because it's very common with residential properties. If you bought a single family or 2 in your backyard, right? Appreciation, right? I'm talking, the first type is natural appreciation, meaning as the old adage goes, right? When you buy properties, the value is all based upon location, location, location. So when I say appreciation, the first part, I'm talking about the natural appreciation. You buying a property in the market that's naturally appreciating, because just to make the math simple, you have jobs coming in, meaning people coming in. This is simple economics. If you have an increase in demand and the supply of real estate stays stagnant, meaning you're not overbuilding, etc., then the prices go up. Natural appreciation, okay? That's what most people invest in. Oh, I bought a property in a good market, in a good area. And as a result, who knows, gentrification, new jobs coming in, the Economic Board of Development doing a lot of cool things in this area, the price point of real estate appreciating. Okay, that's the first part. But with multifamily, this is the reason why I'm a huge fan of multifamily investing. Not saying you can't do this for residential, but with residential, especially mortgage lenders, underwriters, appraisers, they care more about the location. But with multifamily, they care more about performance. Performance. What do I mean by that? Meaning the second type of appreciation. You can force the appreciation. Force appreciation, meaning how well do you manage this asset? When you acquire it, are you increasing the rents or decreasing your costs? It's that simple, right? But how well you manage the asset? How well you make it perform? With multifamily, 5 units and up, or unless it's mixed use, right? Meaning it's commercial and residential mixed together. You can make the property appreciate more based upon how well you manage it. Increase the income, decrease in costs. Appreciation. Let's get to the second thing, the S in CASA. The S stands for shelter. And what I mean by shelter, a tax shelter, right? If you're a high income earner and you're looking to reduce your tax liability to Uncle Sam, right? Because you know you're gonna owe Uncle Sam a big check because of how much money you earn. That's a good problem to have, by the way. But a good solution to have is a multifamily portfolio. Where multifamily, we have something that's called depreciation expense. It's a phantom expense in which you can depreciate the value of that asset over time to reduce your tax liability. Now, if you're a person that says, well, I earned a lot of money this year and I'm not trying to wait 30 some odd years to depreciate this asset. I want to accelerate it. Well, there's a thing called accelerated depreciation. You definitely reach out to your tax professional, but depending upon what you and your tax professional work out together, you can buy a multifamily asset and accelerate that depreciation so you can take the bulk of the depreciation savings that you have to reduce your tax liability in the first couple of years. Okay, now I'm not a certified public accountant, none of that, but I'm just sharing with you my experience as an investor. If I know that I won big this year in terms of business income, or I'm a high income earner, W2, having real estate helps reduce what I owe from taxes, especially if you have a business, right? Because real estate investing is a business. You have incorporated an entity of some sort. You can write off so many things, right? Like I'm using my phone, for instance, to record this video. And let's say I use my phone for taking photos of a property. I can deduct that, right? Or my vehicle, using the section 179, I can use that to deduct a portion of the purchase price I use to acquire a vehicle as a result of using that vehicle for business use, like looking at properties, right? There are so many tax advantages, tax shelters for the simple point of buying a multifamily property and incorporating an entity. All right, so that's the S. Let's get into the final A. The final A is for amortization. That's the loan amortization. What do you mean by that? Amortization means the time it takes to pay off the loan. By having these wonderful people called tenants occupy your multifamily property, every single month they send you a check, or your property manager sends you a check, and you're receiving that rental income. They, on your behalf, your tenants, they're paying down your debt, your mortgage, and they're increasing the equity that you have from that property month after month, year after year, until that property is paid off in full. I'm not saying you got to pay it off in full, but you get my drift. Every single month, there's principal pay down, okay? And you can start seeing the equity rise, in which, if you're smart, you can pull out that equity through the enforced appreciation, natural appreciation, the debt pay down, right? The loan amortization. You can pull it out later and use that capital to acquire deal number 2. So there are many numbers out there for multifamily investment, but if you're focused on like, hey, I want to pursue a new venture and I want to know what are the key things I need to pay attention to, I need to track to make sure that this is a viable asset, because there's many assets, many vehicles out there. These are the 4 CASA that will help you out tremendously. So let's recap. We have cash flow, money coming in versus money going out. You want that to be positive month after month. A, appreciation, 2 types, natural and forced. All right, you want them both. Second thing, shelter, tax shelter. We have a phantom expense called the depreciation expense. Also, the interest you pay on a loan, you can write that off as well. There's many ways that you can use real estate and entities, businesses, to reduce your tax liability. And last, amortization, loan amortization. Every single time, every single month, you have these beautiful tenants send you rent. They're paying down that mortgage, the principal, namely, and it's growing your equity. So if you're interested in jumping into multifamily, you're not playing around this year. You're tired of the single family game, or you're tired of just earning just income and that's it, and you want to take it to the next level, then what I advise you to do is check the link below and book a call. All right, what we'll do is we'll do a 15-minute discovery call in which we'll ascertain your goals, your risks, what you're looking to do, etc. See if it makes sense, if it's a fit, and if so, we'll take it from there. All right, but hey, in this video, you don't have to do anything I recommend, but I do just share this. Just keep coming back, keep watching the video, take notes, get the knowledge, the understanding, because once you gain the confidence and the understanding, you'll be more confident in making a decision. And that's the key thing. You got to make a decision. All right, guys, that's it. I'm Juan Pablo. Peace. As always, this is to your success. Continue to earn passively, live passionately. Peace.